All right, so top-down analysis on ES. So start from the weekly. Always start from the weekly, and we're looking to make sure that the weekly levels are still in line with our bias, right? So we can see right here, we have a high, a weekly high, and that's pretty close to where we are around right now. So we're either going to break through this weekly high and continue moving up, or we're going to have a strong rejection off of it, right? And all these levels are all on a smaller time frame, so keep that in mind. So we'll go to the daily, and it's the same kind of thing. You can still see this high is still relevant right here. Haven't quite closed above it, right? We've had some movement, but we haven't closed above it on the daily. So if we close above this high, we could definitely be making new all-time highs, right? So keep that in mind. Keep that in mind. So then we're going to go down to the 4 hour, and as you can see, we have a high right here. An actual, this is the all-time high. This is the highest the price has ever been. Then we have a low right here. All right, so we kind of identify that range. So we're going to go down to the 1 hour, which is where I mark out my zones, mark out my highs and lows, mark out liquidity zones, New York Open on the 15-minute, right? So highs and lows on the 1 hour, opens on the 15-minute because it gives me a better representation of what price is doing in that first 15-minute period. So right here, what am I looking at? So the main thing I have in mind is this recent all-time high, right? So 5348.75, important level. I also have opening gap from Friday to Sunday. And then I have this London low, which price is targeting right now. So price will either target this London low and bounce, or I think we could see a bounce here if buyers remain strong. So it could be an interesting area to look at right here, potential area for longs if we do come next to it and bounce it. If we close below it, I'm not interested, but if we come down and we bounce here, that could be a nice area for longs. Nice 5-point scalp right here. Bam, stops below this zone, like right around probably this high. So just monitor that, watch that, and we'll see how that plays out. And then we also are looking at this low. This is a very, very strong low. As you can see, price comes down. A lot of buyers right here, right? This is a 1 hour candle. You can see that we had such a big move on that. So just tons and tons of movement. And it's really important to just look at those areas. Always be paying attention to areas that price just is a huge move, because that just means there's a lot of buyers, a lot of volume, right? And the market's made of volume, so we need volume. Make sure everybody, cool, cool, cool. So watch the opening gap right here. We'll likely see some volume. We'll either see a bounce or just a straight breakthrough. If we do break through, I would be targeting something down here. I would like to see a little bit of volume come in right here. You need volume to move the market, right? So right here you can see how much volume we have. That's on the 1 hour, so let's actually go down to the 15-minute now. Let's see how we react. I heard somebody say one time, and it's so true. Trading is 90% waiting and 10% executing. Most of you mess up the waiting part because you just want to get into the trade. You just want to get in and make money. So you don't actually wait for a trade to happen, right? It's like when I think somebody asked me the other day, it was like Saturday at 3 p.m. Somebody's like, yo, where are the options calls? Like, why are there no options calls? Like, I'm trying to make some money. And I'm like, brother, it's Saturday, right? The market's closed on Saturday. So, like, first thing is like, know when the market opens, and you should not be trading if you don't know when the market opens and closes. You should be understanding that, then you should be trading. Second thing is that you need to be patient. You need to be patient, right? Like, know when the market opens and closes, and know that we can't just like pull options calls out of thin air. what we can do is we can look at a setup. So like when one of our analysts sees a setup and he's like, I have a big play coming, it's because he's looking at a setup, he's watching it unfold. And if that play does what he wants it to do, he'll be able to see it and he'll be like, okay, right, I'm gonna send an alert. But like we can't just send random options alerts. Some people do. Some of these other people just send random alerts, and some of these other servers like just send alerts to send alerts. But we actually send alerts when we see good setups, when we see good trades. So we're not going to send you an alert if we don't see a good trade, right? And does that mean every single trade is going to hit? No, but it does mean that there's a good reasoning behind every single trade we're in. So let's watch this right here. Let's see if we do get a little bit of a bounce right here. We could open a gap. There's usually a lot of buyers around this zone, or either buyers or sellers. I just said there is a lot of buyers around the zone right now because what we had right here is we had a lot of buying pressure right on open. So let's see if those buyers come back in, push the price back up, or if they get stopped out and then price moves down. Somebody said, I don't see that gap in my chart. That's because you have regular trading hours on and I have extended or electronic trading hours on. Also, make sure you're looking at ES. Let's see if we get a little bounce here, right? Because we do have a little bit of a confluence. We have London low and we also have this gap. So that could be a nice criteria for a little bounce, right? Nothing crazy. I'm not expecting like a 20-point move. I'd just be expecting a 5 to 10-point move and possibly a retest of this New York open area of liquidity right here. Let's go down to the smaller time frames and just see how this looks. So I'd want a candle closure above there on the 5-minute as well. Let's go down to the 1 minute, see how the volume's doing. So we're going to need some more volume for this move to happen, which could definitely happen, but we're going to need some more volume. Volume is what moves the market. Think of it like this. I think I said the other day, surfers need waves, right? Or else there's no, or they need wind, which then makes waves, and then they can surf. Traders need volume, which makes movement, and then they can trade. Because if you have no movement, you can't really trade. Right? If it's a super choppy thing, if it's like only ranging 2 or 3 points, you can't trade that. You could physically trade that, but you won't. You won't do well because there's not enough movement. You'll just get chopped around, and you end up taking small little cuts of your account. One loss there, then a bigger loss because you try to get back the loss you just had. So there's a little bit of volume. The 1 minute is very useful to monitor volume. I wouldn't recommend entering trades on the 1 minute, but I would recommend using it to monitor volume. So we're getting some volume here. Yep. Go back to the 15. There's that volume. We are going to need a little bit more though. If you're scalping, why don't you recommend trading on the 1 minute when you're entering? I have no problem with you entering on the 1 minute as long as you're using the 5 minute and the 15 minute for confluence too. I just want you looking at all the time frames, right? So like I would rephrase that to say that entering on the 1 minute is fine as long as you have a clear understanding of exactly what's going on the 5 minute, 15 minute, and 1 hour as well, right? So if you ever are entering on a smaller time frame, just make sure you're looking at all time frames when you make that decision. I just don't want you basing your decisions purely off the 1 minute. Right, so if we do come up, test this area of liquidity, as I said, I would be looking for rejection around here. So I'd probably be like, all right, taking profits right here, nice little 5 points. And then after that, I would want to see how we open up around 9:30, see if we do get some volume, bring us to the upside, create new all-time highs, which would have to be around this area. So this is our area for new all-time highs. 5349. Yeah, I mean, a lot of your mistakes will come from waiting when you should be waiting because you just force trades. Right? Like there's a few setups that happen every day, and most of you do not get to them because you are just trying to trade every single thing you see. Like impatience, I see it so much. People will enter a trade and they'll be like, "Oh, why am I down? It's been 10 seconds." And I'm like, "Brother, you're down $2. It's been 10 seconds." Like, if you're gonna be emotionally affected by the trade, you're either risking way too much money or you're just not in the right mindset. But usually it's the first one. Usually people are just risking way too much money. So they're worried when a trade goes up or down. And if you're worried, you're risking too much money. Because think about it. If you're only risking a little bit of money, you're not going to be that worried because you're going to be like, okay, this goes wrong, like whatever. Like I know how much money I'm going to lose. But if you don't have a plan on how much money you're going to lose, then you're going to be very stressed out because our mind is afraid of the unknown. That's why we're afraid of the dark. We're not afraid of the dark because we know what's in the dark. We're afraid of the dark because we can't see it. So when you're entering a trade and you don't know when you're going to get out, it's kind of like walking into a dark room. So within 5 minutes of that trade, you should have a plan on when you're going to get out. You should not be deciding when you're going to get out of the trade 3 days after you're already in the trade or an hour after you're already in the trade. That should be the first thing you do is decide, okay, when am I getting out of this trade? Right? And for some people, that may be a 100% gainer. For some people, that may be a 500% gainer because they just want to take the lotto. For some people, they're going to get out when they're down 10%. Some people are going to get down when some people are just going to let the option expire because they don't really care, right? So just understand that. Some people in here have accounts that are 1,000, 5,000. Some people in here have seven-figure accounts, right? So it varies widely. So understand that. As traders, our job is to manage risk, right? Because managing risk allows us to get that reward. If we don't manage our risk, there will be no reward. There will be no reward. So you need to manage your risk. You can't let your risk take you out. So I'll send out the game plan at around 9:05, 9:15. But for those of you that are in here, the game plan is, I'm trying to get us a wider view so we can discuss this. So here's the game plan. The game plan is to see if price can break above this high right here at 5336. If price breaks above this high, to see if it can test 5349. If price does test 5349, I would like to either see it reject or break through and then make new all-time highs. If price closes below this opening gap right here that we just talked about, I would like to see it come down and target one of these lows. Right, so very, very long candlestick. I'm still scrolling down. 5305. So I'd like to see price come target 5305 if we close below this level, this 533025 level right here. Or 5329, I should say. So that's the game plan. So above here, I would also be looking to take longs targeting around this area. Right, so that's my game plan for today. We do have a lot of earnings calls this week, so for my options people, there will likely be some nice plays, some nice calls, some consistent ones, and some lottos. If you don't know what a lotto means, lotto just means like super risky, right? Like sometimes people will say like lotto earnings play. That means very risky trade, high risk, high reward. Right, so if this candlestick cannot close above this low, this bounce is no longer in play. Bounce is no longer in play. How do you feel about RSI? RSI can be decent with confluence, right? But like my thing with indicators is that I don't think it's good to rely solely on indicators. So if you already have a good strategy and you're just using RSI as another confluence, that's totally good, right? But don't have RSI and then try to make your trades based off the RSI. Have another strategy and then let RSI be kind of like a reminder, or like just something that lets you kind of view it in a different way. But just don't take trades purely based off indicators, because indicators just by themselves are usually not very helpful in my experience. Somebody asked, are you going to make more videos on mindset? A ton more videos on mindset. Mindset's so important. Let's go check this volume out again, see what we're doing here. So we did get some initial volume right there, right? Right at that initial bounce, like 4 points up. But still a little bit low volume right now. So we would need some volume to come in for us to continue this move. No volume. If we close below this level, that bounce is no longer in play. It's definitely a pretty small range so far today. So this is our high. This currently is our low if we close below here. So not a big range yet. So let's see what direction we break out to. Slow volume. This is the part where you just kind of watch and you see what price is doing. The other thing that's so important about days like this is having a plan. Like my plan, I share this very frequently, is I trade from pretty much 8:15 or 8:30 to 10:30, 11 at the latest. After that, I am no longer trading. So if you ever ask me what do I think about this trade or whatever after 10:30, I'm not trading. So I might be looking at the charts, but I'm not trading after 10:30, maybe 11. Sometimes I'll trade the afternoon session, but that's very rare. The reason I do that is because it gets my mind in a habit. And I understood that most of my good trades happen between 8:30 and 10:30. And most of my bad trades would happen after 11. So I'm like, what do I do? Only trade when I have good trades. It's very simple. And at first I was pissed because I was like, oh, I'm not going to be able to trade as much. I'm not going to be able to make as much money. But it's actually the opposite. When I traded strictly 8:30 to 10:30, I actually made a lot more money because I was only focused on finding A plus setups within that time period. And a lot of your mistakes will happen after 10:30. They just will. A lot of your mistakes will happen in that afternoon session. Especially if you've been on the charts all day looking at that, right? Because your mind's tired, your body's tired, you know what I mean? So you're not going to be making good decisions because you're looking at these charts for so long. You're not going to be making any good decisions. So after this candle closure on the 5 minute and on the 15 minute and this new 1 hour candle, we'll have a little bit better idea of what's going on here. This closes below here. This closes below 530.25. I no longer like this bounce. It could still happen, but I don't like it as much. We close below this opening gap, I would definitely be looking to target some more downside. So let's see, we got 15 seconds left. 10, 9, 7, 6, 5, 4, 3, 2, 1. Take off. Definitely close below it. But you see, we didn't fully close below it. Because here's the thing. This wick is still right here. Right? So for us to fully close below it, we would need this candle, the wick of this candle, to be below this, right? Because the wick's still here. So that's why it could still have the potential to bounce in the 1 hour. Because we didn't fully close below it. So that's the thing you got to pay attention to. And I even got to remind myself is like, a lot of times it'll look like it's closing below it, but if this wick's still here, we didn't fully close below it. Just like right here, like this did not fully close below it, but this did because there's no wick above here. Around that 5336.50 level. So what I will do right now is I'll open up the floor for any questions. You can ask me about mindset, trading, advice, anything you need. So if you have some questions that I missed, please feel free to ask. Please feel free to ask. Bam, I just checked the profits section. Somebody already made $250. Quick scalp. I love it. Would you recommend trying to get in habit of setting a time frame each day to trade, even if you're a beginner or just starting out? Yes, absolutely. I actually wish I would have done that. Absolutely, I would do that. Right? Absolutely, because when you're a beginner, one of your most important things is building habits. So you want to start out with good habits. You want to start out building habits that are going to serve you well, not habits that are going to serve you bad. When I was a beginner, I didn't have any habits. I would just trade all day, every day, and it didn't really work for a while. So I had to start getting in rules. I had to start getting in a rhythm, right, of setting rules when I'm actually going to trade. So I definitely recommend understanding how that all works, right, and setting a time frame, even if you're not even trading, just a time frame where you'll look at the markets. I highly, highly recommend that. Good question. Hey, I'm new to this. Definitely watch the courses. Yeah, definitely watch. If you have any questions like how do I read the alerts or how do I gotta watch the courses, right? I don't just make the courses for fun, right? Like courses are helpful. You know what I mean? Like I make the courses so you can watch them. And very often I see people ask questions that are answered in the courses multiple times. So I'm like, this guy did not watch the courses. And some of y'all tell me you did. And I'm like, what? Like you're asking me a question that I answered like 10 times in the course, you know? So definitely watch the courses. Somebody asked about a global situation and how that could affect the market. Definitely. So that could affect the market. And I'm not going to like go too deep into that. But what I am going to say is these events, they all are like domino effects, right? And that's usually not a good thing, especially with this situation, because when one thing happens, another thing is going to happen, and then the market sees uncertainty, and especially we're in an election year, so things can get kind of crazy. So that's why I sent out a big message, I think it was about a month ago, on how times like this you have to be very careful, right? Very, very careful. You always have to be careful when you're investing, but especially times like this because there's so much uncertainty in the markets, and the markets don't like uncertainty. So you could see a COVID-like drop one of these days just because some crazy event happens, right? So I'm not going to like come out here and start predicting what events are going to happen, but what I can say is that we're in a time of uncertainty, just like we were before COVID, or hopefully YouTube doesn't ban me for saying that, the pandemic, right? But whatever is going to happen could have a large effect on the markets, right? So do I know exactly what's going to happen? No, but do I know that these things are often the cause of another larger event? Yes, right? So be very careful in terms of trading, and don't look at the market right now in terms of it going up and say this is just going to go on forever and ever and ever, because it's not. Where are you getting your points of liquidity from? So that is covered in depth in the courses, and I just went over it, but I'll go over it again. So this is a high. This is a New York, or I'm sorry, this is an Asian high and a London high. This is the New York open, right? So right here, New York open. This is the London low. This is the opening gap, right? So that's mainly where I'm getting my points of liquidity from. But there's definitely a great course video on liquidity. It's literally just called liquidity. Just me sitting there talking about liquidity, what it is, how to find it. All liquidity really means is how easy it is to buy and sell an asset. So if somebody asks you how liquid you are, if you're buying a house and the real estate or whoever's selling the house says, how liquid are you? They mean, how much money do you have? So how easily can you buy this house, right? So in terms of the market, that means how easily can you buy and sell the asset, right? So you'll need volume in order to buy and sell the asset, and you'll also need other people, which is just volume. You'll need bids and asks, because the market is just a combination of bids and asks, right? Buyers and sellers. It's a constant tug of war. So no real volume right now. So it is a bank holiday, so we might have a little bit slower volume today, but volume we'll probably get some volume today. I don't think we'll be slow volume the whole day. If we're slow volume today, we'll definitely have volume tomorrow, or we'll just get volume in the afternoon session. That's what happened on Friday. We had no volume in the morning, a little bit of volume, 9:30, 10:30. Afternoon session, we had some volume. All right, we had some volume. So the buyers and sellers were just kind of waiting until the afternoon. What is trading like in the bear market? Good question. So this is actually kind of an interesting story. So I used to be so scared of bear markets because I was like, oh shit, like nobody's going to be able to make any money. It's so bad. But the good news is that most people on here, and even if you're an investor, this actually applies to you. We are traders. So it doesn't matter if the price goes up or down. It matters if we're right. So the price could just continue going down for the next 5 years. And as long as we're right, we make a ton of money, right? So that's the nice thing is like, we make money if we're right. We don't make money if the price goes up or down. You can sell, you can short, you can do all that stuff. You can buy put options. So we make money if we're right. We don't make money if the price goes up, which is very comforting to know. So bear market, you'll be just fine. Unless you have a ton of holdings in an asset that you bought at the all-time high, then you'll be in a little bit of trouble. So we said, what commodities are affected by the global situations going on? I'm just not trying to like say everything in depth because YouTube's sensitive with everything, but I'm very aware of what's going on, trust me. Um, Gold will be affected likely, wheat, platinum, oil, all that kind of stuff. Oil's a big one. Oil's a very, very big one. And likely the dollar index as well. Forex, most of the Forex markets will be pretty much everything, right? Because everything's like the market, think of the market like this. So like, um, I'm trying to think of a good analogy for this. So do you know those like think of a gearbox, like a big gearbox. So if I have like 5,000 gears, just like kind of shifting like this, and every time I move one gear, all the other gears move in a little bit of a different way. Does that make sense? So like every single action, even if this gear just moves like this, the gear over here will move because this gear moved a little bit this, which then this gear moved a little bit and then moved. You know what I mean? Does that make sense? So like this gear moved this gear a little bit, moved the top gear up a little bit, then this gear moves. So every single time one gear moves, one single aspect moves, the whole market will have a reaction. Whether that reaction is big or large, or I'm sorry, big or small, will be determined on that event. But there will always be some sort of trickle effect, right? So like a spider web, like every single time there's one little move, it'll affect something over here, even if it's just in the smallest way. But that's a good question. But that's how I'd look at it. I'd look at the market as like one big machine. Very interesting. I highly recommend you study geopolitics. Ray Dalio is a great guy for that. Ray Dalio is he's actually one of the richest men on this planet, but he's the founders of one of the biggest hedge funds, Bridgewater, and they have billions of dollars under management. He has great stuff. He knows exactly what he's doing. I would definitely read all of his books. But not like an easy read. It's not like reading like Diary of Wimpy Kid or something, right? Like it's a tough read. You know what I mean? But it'll help you a lot. Will you ever make a lesson on how to deal with taxes? No, because my accountant does my taxes for me, and I'm not a tax advisor, right? So I could get a tax advisor on here to make a lesson about how to deal with taxes, but I'm not going to speak on things that I'm not completely proficient in, right? So I wouldn't just want to come on and start like talking about it if I don't really know the specifics, because my taxes are very simple. It's like I make X amount of money, my accountant helps me pay my taxes, right? So I'm not like doing the nitty gritty of that. But it's also people in here are all from different states, from different countries. So I'm not going to just give some tax like that. That could be a mess, right? But what I could do is I could get a tax advisor on here on a live stream for y'all to ask him questions. Bro, y'all in the comments, y'all got to know this is going on YouTube and I'm screen sharing. So, but luckily y'all got like I'm playing. Somebody said real G's don't pay taxes. Pay your taxes, man. Pay your damn taxes. I promise you. Unless you live in like somewhere where you don't have to pay taxes, but please pay your taxes. It'll be a great decision. Trust me. How you structure journal or trades? Yeah, so I journal pretty much my whole day, and I start usually with just how I'm doing in the morning, right? So like where my mind's at, and I take pretty much inventory of everything I do. So if I work out, what I ate last night, what I have this morning, if I'm on caffeine, if I'm not having caffeine, and then I also just talk about my trades. I usually try a quick little paragraph about how my trades are, and that just goes into part of my journal. So it's kind of like a big journal that just encompasses pretty much everything in my day, and it'll usually be something like, okay, I took this trade. The reason I took this trade is because, for example, let's say this played out. I saw it bounce off the opening gap and off of the London low, and I targeted this for 5 points. This trade did not cause me any mental stress. I was in this trade for 10 minutes. This was a quick trade. This was my only trade today. I made $2,000, right? I really like taking trades like this because these kind of trades allow me to just get in the market, get out. Or let's say I tried to take a trade and it didn't work. I'd try to find out really why I took that loss. So let's say I tried to take let's just say I bought right here. There's no confirmation of buy right here. Let's just say I bought right here because I saw something on like the 1 minute. I would say, okay, I lost this trade because I entered on the 1 minute. And I didn't use the 5 minute and 15 minute for confluence. So I would try to get a good understanding of exactly why it worked and especially why it didn't work, because then your brain will start to understand, okay, this is working, this is not working, and it'll fix that. It'll fix that subconsciously and consciously. On what are you journaling? I have a normal journal, so like a hand journal. And then I also use Notion's great, or just the notes app on my phone, but Notion's great. I have a lot of stuff on Notion. So yeah, so no real volume right now. So we're still waiting for see if the setup plays out. It could, but there's no real volume right here. All right, so I'm going to end the YouTube video section right here. Peace out.